Hello to everyone, my name is Gregor and welcome to our new video update surfing the Elliott waves, where I will look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the US yields and US notes, dollar index S&P 500, Aussie versus US dollar and versus pound, and also I will look at silver. So the US yields came to the downside yesterday after the Fed announced to be on hold. However, they said that a lot of next policy decisions will depend on economic and labor data. So it's still very interesting to see US yields coming that aggressively to the downside. I think that speculators just believe that sooner or later we will see this Fed that will be done with hikes and potentially even some cuts could show up in 2024. So US yields are lower. Of course, this has also a bearish impact on the US dollar. But looking at the US yields and the wave structure here, as long as we are holding this 4.5%, I still think that this can be a way for potentially corrective retracement. So as long as we are also trading above this trend line support, I just think that there is just another correction within uptrend. Of course, I'm expecting also a major top, but this one can still be looking at the higher prices before the market really comes down. But if suddenly, let's say that 4.5% are out, then I will say the top is in place and dollar in such case could be seen much lower prices. Now looking at the US notes, there we should keep an eye on this October 2022 swing low. If we can see a daily weekly closes above that levels and obviously at the same time above that down trend line here, then I think that the trend is changing. Okay, but still now when the US dollar index is in a pullback mode, I think that the most attractive can be commodity currencies. We are seeing Aussie doing pretty well because stocks are also to the moving to the upside. And one of the main and important things regarding Aussie is that RBI last week highlighted that they could be looking for additional rate hikes because also inflation reported last week came stronger than expected. So I think that Aussie could be very attractive. But before we go to the Aussie, let me just show you a quick update here on the S&P 500. Now we are seeing this very nice bounce from the lower trend line of this wedge pattern leading diagonal that we recently also updated it on here for our Elliott wave updates. And what we are actually seeing now is a completion of this pattern because market has made a pretty strong bounce here. So I think that's the first leg of a minimum free wave recovery. So I think that this recovery, even if it will be temporary, has legs for much more upside back towards the area of a former wave 4, meaning 50, even 61.8% retracement can be seen. But I still have another wave count here, which actually shows that that's an WXY, or I should better say double zigzag correction here on the way to lower prices. But even this one suggests that even if it's a temporary corrective wave B recovery, there is room to retest the upper side of this downward channel here at 4300, then would be the first resistance. So I still think that more upside based on both wave counts is very probable here. Okay, so I think when we have now the stocks moving just into temporary recovery, we are seeing a relief rally. I just think that euro could maybe stay sideways with the dollar index, even if the euro could be for some attractive on the long side. I just think that Aussie is maybe much better under these circumstances where you have RBI much more hawkish compared to the ECB. So that's why I'm saying that Aussie could be very interesting. We in fact are seeing a massive break out of this wedge pattern, out of an ending diagonal. So I think that bulls can be in the cards back to the former wave 4. Normally when the ending diagonal or wedge pattern is completed, we expect a retracement minimum to the starting point of that pattern. Okay, so that was clearly here around 6500. So I think that more upside here could be seen and the buying pullbacks could really be interesting, especially if tomorrow after non-farm payrolls report this trend will stay intact here. Okay, and that will not see any kind of changes here. Also today we have Bank of England, so it will be very interesting to see how pound will be trading after today's close. But looking at this pound Aussie chart, I think that we have a very beautiful potential head and shoulders top formation. So I'm watching and waiting to see if we can get a daily close below this neckline. Then I think that more upside here could be in the cards, which certainly um, is expected from an Elliott wave perspective. What we are seeing, the first very nice impulsive drop from the highs, that was a correction, and obviously I would be expecting either a drop into wave C, maybe even into a powerful wave 3. So watch out for more gains here, for more Aussie strength here versus pound and versus the US dollar. But if this neckline today after Bank of England policy announcement will hold, and let's say we will rally, then I'm afraid that wave 2 or wave B will still be in place, but just much more complex than firstly thought. Okay, but in either case, I just think that sooner or later we will see more weakness on this pair. And now let's take a look on silver. So here, very big time frame. We are looking at this pattern that is now in progress for the last 2 years, if not more. And what we are seeing is a potential triangle currently with wave D targeting upper side of this range. Okay, so I think that even if we are sideways on a big time frames, there's room to make money on the upside, because notice that here from the recent lows, that was a very nice 5 waves up, and now you are in a corrective price action. Can be an ABC flat, maybe still a deeper ABC is also possible if we could transform some kind of a triangle here, but the ideal support remains at 2220 up to 2250 or so. Deeper support is around 2170. Okay, so I think that more upside here could be still seen on silver. And also, not only that, we have a potential hand and shoulders formation here. So left shoulder, head, and right shoulder. So if we can break the neckline, then we know that targets can be much higher here. Okay, viewers, thank you very much for your attention. I hope that you enjoyed this video, and talk to you soon. Bye.